Hey, good afternoon. George Cavaligos for HFT Bonds Notes. Well, expected the pullback to test the old highs, and we got it on the opening last night, and then again very early this morning. That second little dip threw me off a little bit. I didn't expect it to go down that far, but I had a little long position there that got stopped out on that, and I wasn't long for the number, which was the whole day basically. We had that smoking rally. Since the number this morning, bonds sitting right up near the high end of its range. I don't know if we're going to get a dip. We might just, steam higher from here. We have seen some selling out of the Asian sessions lately. Hard selling last night on the opening for some reason, especially in the 10-year. That's when the low was made initially. Second round of selling again tonight, maybe. I'm not so sure because we saw some weakness in Japan's stock market yesterday, down 2%. Our stocks are a little bit weaker here today. S&P's down 6.5 points, and it's coming off its lows right now. That kind of rangy type trade. So I'm leaning towards buying the dip. I'm going to keep it small. Today in the 10-year, I think we made one tick higher highs 3 times, and I think in the bonds we made one tick higher highs twice. And to me, that kind of reeks of range type trading. Even though we made higher highs in the bonds by a tick twice, I think we could see that kind of trade tonight again too. I'm looking for kind of higher highs, but it's going to be 1 or 2 ticks. You're not going to fill the roll gap, so we got a ways to go there, but use the 10-year gap. If we get up there, kick out your longs kind of thing. So we're in the buy dip mode here. I think through probably Thursday into the non-farm data. We have buybacks every day this week except for Friday, and it's kind of odd. I looked at the buyback schedule. They have scheduled 4 buybacks per week through the end of April, so they're taking like a day off every week, but they're making what looked like the 4 days of buying a little bit more than they had done previously, which is odd. I don't know why they're doing it. Maybe they're just taking 3-day weekends over there. Maybe the sequesters putting them all on furlough. That's not right. The Fed is their own balance sheet. It's not part of the government, right? Fed's owned by the banks, not owned by the government. So, okay, buy dips, sell a new high. I don't want to short this thing. The buybacks, I think, are really putting a squeeze on supply. The mess in Europe continues, and now we're getting some kind of weakish economic data. The PMI data here was obviously weak today. That's what drove the big rally. PMI data out of China was